What's up everyone, it's Scotty with Money Investing. So in this video, I wanted to talk a little bit about Enphase because I've been getting a lot of questions on YouTube, on Discord, what my plans are, because this was a stock that was like my highest conviction. Is it still my highest conviction? What am I planning to do with this position? Am I buying? Am I selling? What is my forecast? All those questions will be answered in this video, and I'm only gonna do this video once because I feel like every time I do this video, same questions pop up weeks later. So I'm gonna do this once and for all. I'm gonna explain everything that I'm planning to do with Enphase, and hopefully it gives you a little bit of an insight, and of course helps you with your decision making, of course your analysis and your due diligence as well. So I hope you guys enjoy this video and find it helpful. If you do, the least you could do and the only thing that I'm asking from you is make sure that you drop a like and subscribe to the channel. Link to our Discord and Patreon is going to be down below. Feel free to check that out, and we'll love to have you on board as a money investing member. Of course, you get access to all the buy and sell alerts, options alerts, trade ideas, all the intrinsic value spreadsheets, members only private videos. We're going to get started here once again. A little bit of a break that I took because of my family vacation, but we're back at it. And of course, starting tomorrow, all live streams and everything's going to be back with full swing. Lots of content that I'm going to be publishing here starting tomorrow again. So again, links are going to be down below. We'd love to have you on board. So the bottom line is that Enphase obviously did report earnings, and it has been selling off quite aggressively here. You can kind of ignore that. But if you go over to Enphase, ENPH, what you will notice is that it's now trading as low as 130, right? 135, 130, that's where it's at right now, 138 to be precise. And of course, the prices have been selling off quite aggressively. On the day, it is up a little bit over 2%, but the bottom line is it is still down substantially from its all-time highs of well over $340. It is down almost 60%. And of course, from its recent highs of well over 165, in fact, it even got up to as much as 190. It is down a little bit over 27%. And a lot of that came after the earnings were released, right? Earnings were released. The company did not provide a very strong guidance. And as a result, it sold off pretty aggressively, gapped down, and then accelerated that sell-off as well. So the bottom line is, and everything that you need to know really in a nutshell is that my thesis is unwavered, right? It is still a very strong potential company in the renewable energy space. We know that most countries and most governments are allocating specific budgets and funds towards renewable energy and solar energy. So Enphase is still the leader. It's still got a lot of potential to unlock. It's still got a lot of runway for growth. Yes, there's going to be some hiccups. Yes, there's going to be some challenges in the short term because it's all a business cycle, right? So there's not a single company that can consistently keep growing every single year, right? There will be years when they actually do contract. Like for example, Apple this year, their revenue is down on a year-over-year basis. Their operating income, their net income is down on a year-over-year basis. Does that mean that Apple is no longer a growth company? No. It goes through these business cycles where you do have to kind of account for all the macroeconomic factors, all the uncertainty around the economy with respect to spending, with respect to interest rates, with respect to the labor market, with respect to inflation, right? There's a lot of dynamics at play. Just like that with Enphase, the fact that they're still able to grow even in this environment, I think 37-40% revenue growth with a 30% plus earnings growth is nothing short of extraordinary in a year like 2023. So that being said, to answer your question, no, my thesis has not changed. And yes, I am still very confident in the long-term potential for Enphase. Now, the guidance was obviously one of the main reasons why the stock sold off. So that definitely does maybe increase that. Just, I would say, like, if I were confident, if I had certainty 75-80% maybe before, after the guidance, which was maybe a little bit lower than what the expectations were, maybe it's down to 70% or 75%. But I also do understand it's a one-off thing, right? If the company starts declining revenues or earnings in the next, let's say, several quarters, then yes, my thesis will start to change because that will tell me what the demand isn't as strong. Another thing I want to point out is that when interest rates do in fact get cut and they start coming down, that is also going to be a great indicator for where demand really is, right? Because right now it's also difficult for consumers to finance this big purchase because it's not that easy just to call Enphase and start installing those solar panels or those micro inverters and battery packs. It takes a lot of money, right? On average, $20, $25, maybe $30,000 to build an entire solar system in the house. It's not a small expense, right? It's definitely something that people and families need to think about. So, of course, Enphase has suffered another correction attributed to the second quarter 23 earnings miss and underwhelming guidance. The company has recorded revenues of $711 million, a 34% growth year over year in the latest quarter, missing its top line guidance of $725 million. And of course, if you read further, therefore, it's not surprising that Enphase's valuation has also plunged. So now it's starting to trade at a very, I would say, not really like a super attractive, like a deep valuation, but it's definitely reasonable, so to speak, compared to where it was 2 years ago, 3 years ago, maybe even 6 months ago. So now the next 12-month P multiple of just under 27 compared to its 1-year mean of a little bit under 47. And of course, this right here is price to sales. It's 7.5, down from 11, normalizing to its pre-pandemic mean of 3.42 and 27.5 respectively. So obviously we still have maybe a little bit more downside, and that's exactly one of the reasons why Enphase, for me, in the 110s, 120s starts to become like a very, very attractive deal at those prices. That's exactly why we have a good deal label over here for the longest time for Enphase inside this green rectangle, right? So that's going to be the level to really be paying attention to. Now, the same cadence has been observed with First Solar, with the latter's valuation also drastically declining compared to its year-to-date mean and, of course, the pre-pandemic mean. It appears that the market rallies around the tech stocks and generative AI and the optimism surrounding Renewable and Inflation Reduction Act have also moderated accordingly as well. Now, there's also a couple things that I want to mention. The bulls definitely have a lot to say. Bears, maybe not so much. There was only one argument for the bears earlier on Enphase, which was the valuation, which is now completely eliminated because of the fact that it's down so much. Enphase remains a buy despite the underwhelming first second quarter 23 miss and guidance. Bottom fishing investors may consider adding at the 120s for an improved margin of safety. Long growth runway, superior profitability, strong competitive positioning make Enphase a promising investment opportunity despite short-term headwinds from higher interest rates. And then finally, Enphase continues to maintain a high market share while managing a tough operating environment in the US. As I said, again, it's an extraordinary thing, right? Given the 2023 environment, in addition to its attraction in new products and new geographies are driving strong growth as well. We got still earnings expectations at $5.06, growing to over $12.78. That's still a very strong growth rate. And revenue expected at just under $9 billion by the year 2032. So bottom line is that, again, good deal levels with a strong margin of safety and a conservative expectation and valuations and estimates, 120s and below would be like a great deal opportunity, in my opinion, attractive buys. And the reason why I haven't really been aggressive here, because I want to actually make a dent into my cost basis, right? You guys know, if you are a part of our Discord, you guys know that I was buying in the 170s, I was buying in the 160s, now it's in the 130s. I'm happy to buy, maybe dollar cost average, no problem, but I really want to be able to buy in the 120s, 110s, like low 100s would be ideal, because that will actually start putting a dent into my cost basis. And like I said, I've only started a small position into the stock. My plan is to actually grow this into a pretty sizable position, but also want to do it in a nice, steady manner so that I'm doing it while I'm also building my conviction in this company, and I'm not like over leveraging myself into the stock without having that level of certainty, without having that level of confidence. So hope that makes a lot of sense. And again, in the future quarterly earnings reports, we'll have a much better idea on what the future holds for Enphase Energy with respect to interest rates, with respect to the economy, and a lot of different variables that are at play. But just wanted to put this video out there and kind of help you guys understand what the psychology is behind this position. Of course, what am I planning to do? I'm only 10 to 12% into my position, and my plan is, of course, to buy more shares, but at a price where I can actually make a dent into the cost basis, right? It doesn't really matter if you are, it doesn't really make sense if you are constantly dollar cost averaging into a stock for every $1 or $5 drop, right? I mean, it's not going to move your cost basis all that much, right? You want to make sure that it's dropping 20, maybe 25, 30%. That's when you're going to be more and more aggressive at those prices. So you can actually move your cost basis lower dramatically and, of course, make it come closer to the actual market price. So hope that makes sense. As always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining us. As always, happy investing, and I'll see you all in the next video.